Yo, dang, that was loud up in here. What's going on, guys? Hope you're doing well. Welcome to the show. My name is Jay Chains. It's 1:35. I'm 5 minutes late, and I don't give a shit. I hope you guys are doing all right. My bad. I was signing up for all the RSVPs that I need to get for Consensus and Futurist week next week for Canada Blockchain Week heading up there. So I totally forgot what time it was. I had like a little bit ago had said, all right, I got like 45 minutes. I had like everything scheduled. I was like, I'm going to do some things and then I'm going to get some RSVPs done. And then boom, it's time to go, baby. So my bad. My apologies for being late. I appreciate you guys being on time. I guess that's probably better that it works that way. Although it doesn't matter. You show up when you show up. That's always the good thing, right? Like you got here when you're supposed to get here. Whenever you get here, whenever you start listening, whenever you tune in, whenever you smash that like button, whenever you subscribe to the channel or follow on X or do what you got to do. You're doing it because that was the time that you were supposed to be doing it. So appreciate you guys being here. Crypto, am I right? Let's see what's happening in the old markets in a few minutes here. And then I got a ton of stories today. Ton of stories. Let's see, and so we'll try to breeze through most of the stories. There's just a lot of news happening today, and then I also want to, we're gonna do a quick review. We're not gonna do the whole video because this one's like 10 minutes long, but the kind of reaction, we'll get a little bit of it, and then I'll send you guys with the link, and you can finish it the rest of the time. But Sam Altman World Project launching in the U.S. with the iris scans and the visas and giving you some coins. Would you do that? Would you do that? Not me. No way. Although, that's stupid. What is the incentive of it? Because I've done the eyeball scan thing for clear, but I've traded the privacy for the convenience, right? And so that I can just boom, blast through the airport. That's okay. They know who you are anyway. What's the point? So you got my eyeballs. I mean, whatever. As long as you don't create a new one of me, I think we're good. You sometimes, and that's the whole conversation. We've talked about that before, especially on the morning shows, where you trade privacy and security for convenience. And we do it all the time. I'm no stranger to that, or, I'm definitely guilty of it myself, but, it is what it is. But we'll get into some of that stuff a little bit later. Got a fun show for you, packed with news. So we got to get through all those articles, and then we'll look at some charts, see if there's any trades happening. It's one of those days. The market is up a little bit. I know dominance is continuing to push up. This is Bitcoin bull run, and so as you can see, Bitcoin is my plan B. Because you know what my plan A is? Altcoins, baby. I love that. I love messing with people. They're like, oh, dude, yeah, I love that. Bitcoin, plan B. What's your plan A? Altcoins, mother what? Altcoins. I'm not a Bitcoin maximalist. I'm an altcoin maximalist. I am a multi-chain, what is that called? Interoperable. I'm an interoperability maxi. That's what I am. That's where you can lock me up. Shout out to the team that got the medals today. What's up, the Blue Peeps? Crypto Carter in the house. Oh yeah, there it is. All right, so how did things shake out today in the metal count? Brian picking up the gold. DGen Brian, there you go, my G. Mike Vollmer picking up the silver, my guy. And then Mike Lowry. Mike Metal picking up the bronze. There it is. There's your metal count for today. Congratulations to our medal winners. As you guys know, at some point, that's going to be worth a lot of money. So make sure you guys keep doing that. Shout out to you guys being here. All right, make sure you smash the like button. Let's get into the market here. Let me switch this on over like that. All right, looking at coin market cap, we have got a $2.98 trillion market. So we are pushing back to that 3 trillion. Big up. It was like 2.94 yesterday. So we got a little bit of a gain on that, 1.76%. Volume up almost 28%. Let's see here. Dominance on coin market cap says 64.5%, but we don't believe that. You guys know that. If you ride with this channel, you know that we're going to check that shit on TradingView because that's just way higher, way higher. But gas, too, it's been a long time since we actually looked at that. Like, it's just, I feel like insignificant at this point. Why do we care about gas? We don't. Fear and greed index is at 53. It was at 50 just a little bit ago, maybe an hour and a half ago. So that is still going up. Altcoin season 27. Let's go. Let's go check our shrimps. How are our shrimps doing today? If you guys don't know what shrimping is, watch a video or two on my channel. You'll figure it out. Gas was up today. It makes sense, man, because that shit's been cheap, cheap, cheap. Oh, look at this. Bitcoin back to even in the last 90 days. We've seen this thing down as far as 17, 18, maybe even almost 19% since we started doing our little shrimping. This is our ground zero, right? Bitcoin is the ground zero of how has the market performed over the last 90 days. And so as you can see, this is the top 100 performance over the last 90 days. Usually Bitcoin there's not many coins like this up above it. Usually the ones above it are trash. So we've got some things that have made a comeback. There you go. And then down here, this is what we call shrimping, baby. Get out the shrimping nets, get out the boats. We're going down. Okay, and let's look at our portfolio because it was down yesterday, but I have a feeling we're back up a little bit today, which is great thing, great thing, great thing. All right, haven't opened it yet today. Not really up today, up $1.50. I would hope that that's wrong, but potentially it's not. So $694. $694 beginning of April 7th, we started a $500 portfolio of some shrimps. And so we were up big. And then obviously everything is down a little bit on this whole market, even though the shit was way down already. Well, we're talking like, you see like pie at 65% or some of these in the 50s. When we were looking at things in like the 70, 72, 73% down, a lot in the 60s. And they're all the coins, you know. But, you know, a lot of those comebacks have been made. And as you can see, we have, you know, we've made, you know, almost $200. Right now we're at 200. At one point, I think that thing was damn near close to like $800 or $900. And so we had almost dubbed up. Some of the coins had dubbed up. I know that. I believe Render had dubbed up. Fetch, or maybe it was Fetch, had gone over a 200. We talked about that the other day. We'll take a look at that. But, you know, get your shrimp boats out, baby. Bubba Gump, Shrimp Co. We out. We out. We out, yo. All right, that is the altcoin season and the shrimping index. 27. The shrimps are looking good, baby. Shrimps are looking good. All right, let's look at the main markets. What's happening here in the top 10? You got Bit coming at 96.5, man. I really like this thing back at 97, on our way back up to 100K. You think it's going to happen soon? I would love to see a nice little pump here. I mean, it's just been, you know, it's just the target. Let's get back to 100. Let's show them we can do that. Where the bulls at? But with it, you know, obviously we are going to see, and when we get into the charts later, we're going to see the dominance continue to climb up. And it is what, like 65.5%, somewhere around there. At least I believe we wicked up to that at some point. Let me see here. Share this one with you guys so you can see this. So here is the dominance chart. And as you guys know, we're on the road. This is the road to 70%. So 70% watch, dominance watch. We are in it 2025. We are going to be doing live coverage every day. And maybe what we need to do is start watching this dominance and say we get a big push. We're going to have to do a big conference and press conference, like every time we hit a new percent. So we're at 65.42% today. And that is, we are at the heat. Well, this is the week. Let's go to the hourly chart and see. Okay. Yeah, so we've wicked a little. We were as high as, what does this one say? 65.46. So almost 65.5%. My gosh. My gosh. Pi has big news at consensus, says DGen Brian. All right. Well, let's, you know, one of the things that I've been doing all day today is really kind of doing a lot of strategic planning and getting things lined up. I've got a couple massive interviews lined up in Canada, and I'm going to continue to do that. That's the one thing that that is the beauty of having the press pass and having a platform, having a show, and you know, people want to listen, is that, you know, I have been said yes to by the people that I'm reaching out to, that, or people that have even reached out to me to land some interviews. And so it is amazing, and I cannot wait. So I did a lot of that, and you know, I want to continue to go through. I want to go through the speaker list and make sure that if there are any connections that I do have, I can connect with people and get some interviews lined up. I'm bringing the whole set. I'm bringing the good lights. I'm bringing my Sony camera. I'm bringing the good mics. I'm doing it all. And so I'm going to have a full media setup there to do some big time interviews, because there's going to be some really big names attached to some of the interviews that I've already got lined up. So let's get it. See you guys next week. If you're going to be in Canada for Blockchain Week, make sure you say what's up. All right, if you're going to be, I'm going to be out there. I'm going to be emceeing one of the stages at Futurist Conference on Tuesday. So I fly in Monday afternoon, MC the Futurist Conference on Tuesday. Wednesday, Thursday, Friday is consensus. I will be there. I will be in it to win it. I'm going to be having, so a couple of these major interviews, my goal is to get them locked up. So one of them I did today. I got lined in for 9 a.m. on Thursday. So what I got to do is go into my Calendly, and that's just all part of the process now, is just go in and start blocking those times off, and then making sure that, you know, I've got the ones that I like have scheduled already blocked out of there, so nobody can mess with that, and even like some buffer time. And then I want to go out and you know, pass the link out for anybody else that that happens to be there, that wants to get some time behind the mic in the cam. So if you're there, don't be a stranger. And even if you don't want to be behind the camera, you just want to get a beer, man, shoot me a message. I'll be around. Doug, 6 a.m. Doug, he owes me a beer, but I also owe him a beer. So we'll be out there hanging out at some of the events. So yeah, say what's up. Don't be a stranger. All right. Well, I'm gonna have to reach out, see if we can get some information about Pi, and do a little something over there. All right, let's get back to our top 10. Revisit this. We have got, all right, Bitcoin 96.6. You got ETH 1807. Love to see that up 2.25% today. You got XRP 212. Hasn't really done much in the last day. BNB 599. Poof, come on, baby. Get back up over 600. Get back up over 600. Solana 145. Come on, man. Come on, man. Dogecoin 17 cents. That's up all right today, 2.5%. Tron number 9, 24, almost 25 cents. Let's go. And then Cardano rounding out our top 10 with no gain in the last hour, but 1.3% in the last day to 66 cents. And then Sweet coming in at number 11. There you go. All right, let's look at some losers. Any opportunities that we need? EOS pumping today. Wonder why. Virtuals. Maybe it's time to get more of that bag. We've got a little bit ways to go before we're back above water, but hey, this thing is going to rip in the bull run. So Fart coin, this could be a good opportunity to do some good trading on it. It's down 18.5% on the week, down 10% today. So this could be, well, you know what? Yeah, there we go. We got this thing lined up. I got this thing in the mix for us when we get over to the charts. We're going to look at the leapfrog indicator on that for... We might want to get into a long on the Fart coin, because when that thing rips, baby, that thing fucking rips. Render, we got on our shrimp portfolio. We don't want any more of that right now. Pengu. What do I do with my Pengu? Oh, I'm going to put my Pengu sticker on my road case. All right. Thank you, Doug. Yeah, fam, smash the like button. Share it out. Tag your friends. Do the things you got to do. Let them know we're having fun talking crypto, going news. We're going to maybe, you know, we're going to go through some news articles. I don't really think it's going to go too fast, but you know, it is what it is. And then, you know, I'm excited about getting into the charts a little bit later. So if there's anything specific wise you guys want to see me chart and open up the leapfrog indicator on, just drop a message, and if I catch it, I catch it. Let yourself be seen. All right. We'll get to that in just a little bit here. Shout out to all y'all in the chat, yo. My guy, 6 a.m. Doug, lighting it up. Not funny, man. What's up, dude? What's up, my dude? You guys remember that guy? He was a crypto Carter. There it is. You remember that? He was a COVID guy where when he came up, it was the man, I forget his name, but he was doing all the crawfish and all the cooking down in New Orleans. Slam it, my dude. You got to hydrate, my dude. I talk to my dog like that now. Like that accent from that guy. I talk to my dog Jackson like that guy most of the time. He's my dude. So AIOZ and XAI, please. You got it, my guy Doug. Let's start that up. I got you, fam. All right. Not any other big losers. What about losers on the week? Anything that we still got to be looking at? Optimism. Okay, that takes my interest a little bit. I like that. Just under $1 billion market cap. That thing can run. And that reminds me, I want to talk about that a little bit later. We looked at ONDO. When we look at ONDO, I want to look at something that I tweeted today about market caps. And if you look at what BNB did in a previous bull run and what it does, and it's a token that gives you cheaper trade fees. Like, really, what else does BNB do? And I think ran up to 100 billion, and so I think Ondo's got the juice, man. So if it gets to $47 billion market cap, that's a $15 ticket. Come on, man. Like, you don't think that thing's gonna get to $47 billion? It's like a 16x. It's not that much. That's doable. Probably gonna happen this cycle. So smash the like button if you like Ondo. Hit that +1 if you like Ondo. Tag a friend in a tweet if you like Ondo, because you know I do. All right, that is it for the market. Let's blast through some of these articles. It is time. It's time. BlackRock buys $2.5 billion. What's the prediction of the FOMC meeting? Come on, I just would love for them to just boom, no one was expecting it. Boom, we're dropping it. Come on, JP. JP, Jerome Powell. Come on, Jerome. That's at 2:30, so we got 40 minutes until that happens. If we want to turn that on instead of watching the Sam Altman thing, we can definitely do that, because if I'm not mistaken, they have an X account that's going to be live streaming it, so we could pull that up. 97% no cut, right? But we talked about this the other day. That 3% underdog, man, sometimes things happen, right? This could be the pull the wool over their eyes, or make them, you weren't expecting it. Boom, drop them. That would be huge. But it's probably not going to happen, realistically. That's just, we just got that hopium. We're just hopeful, so we're smoking hopium today. We always smoke the hopium here. All right, BlackRock buys $2.5 billion worth of Bitcoin as the Bitcoin price holds steady. Why is that? Well, because they bought it OTC like they do. So it does not, and they buy it sandwiched in between little moves so that you don't notice what's happening. New data from market intelligence firm Arkham reveals that asset management titan BlackRock purchased billions of dollars worth of Bitcoin as the flagship crypto asset closes in on 100K. Let's go. In a new thread on the social media platform X, Arkham says that BlackRock, which is over 11 trillion in AUM, bought 2.5 billion with a B, Billy, worth of Bitcoin last week. Love that. Ooh, what did Fink say? All right, I'm going to read this whole thing for you guys. This is from Larry Fink. He's the CEO of BlackRock, as you guys may or may not know. The U.S. has benefited from the dollar serving as the world's reserve currency for decades, but that's not guaranteed to last forever. The national debt has grown at 3 times the pace of GDP since Times Square's debt clock started ticking in 1989. This year, interest payments will surpass $952 billion, exceeding defense spending. By 2030, mandatory government spending and debt service will consume all federal revenue, creating a permanent deficit. If the U.S. doesn't get its debt under control, its deficits keep ballooning. America risks losing that position to digital assets like Bitcoin. Meanwhile, okay, that's it. Meanwhile, Arkham notes that the publicly traded Bitcoin mining firm Riot Platforms is selling hundreds of Bitcoin. Interesting. Riot just reported that they sold 475 Bitcoin in April for $38 million. Maybe they need money. It's not everybody's got money like BlackRock. Check the world clock in Q1. I'm sure it was terrible. Every time Jerome speaks, I get liquidated. I know. I've got a trade in, but I have a feeling it's going to be one of those stupid scam wicks. It's going to scam wick and then it's going to rip up. But we're in it to win it, just in case it just rips up for whatever reason. It's not a big, but all right. You would think you would think we could start getting some of these buys to really make the market move. But as long as, that is from what I have been told and what I understand and how these countries and companies and notable whatevers are able to acquire large amounts of Bitcoin is in between a move. Like say you got a $5,000 move, they can do their buys in between that while things are moving. And it's like you never even know what's going on. And they can continue to do that with bots and all sorts of shit. So. I'm not afraid to trade. I'll trade the volatility, man. Look, scared money don't make no money, man. It's a couple bucks, right? Just think of it as a couple bucks. It's not your rent money. I fucking hope you're not trying to trade your rent money, right? It's not your food money. It's not the money that you need to survive. That's your trade money. And scared money don't make no money. Sometimes you got to trade the volatility. Sometimes you got to be ready to rock and roll. Got 35 minutes to JP Talks. I wonder if it's going to be like at 2 o'clock, all the news articles come out, and then at 2:30 is, when he comes up. We'll see. We'll keep an eye on it. Let me open up a new tab and just type. Fed set to hold rates steady as Trump's tariffs cloud economic growth. All right, so we could pull. So they've got it. So 34 minutes. We got a countdown here on CNBC, as you guys can see right here. You might not be able to see the clock. Now you'll be able to. It's right here. 34. All right. Well, we'll see how that goes. We'll keep that up, and then whenever that turns on, we can just swap over to it. So. All right, next article here. Coinbase revealing internal SEC conversations about XRP and ask from New York, the AG, to support Ethereum being a security claim. That's wild to me. Coinbase unleashed over 10,000 documents stemming from Freedom of Information Act, or FOIA as we call it here, to multiple agencies, including the SEC. In one email from June 2023, the New York AG office asked the SEC to file an amicus brief in support of the argument that ETH is a security. Sheesh. Moving on. Well, I told you we're going to blast through these. U.S. Treasury advocates for digital asset leadership. So our guy Scott Bessent, right? U.S. Treasury aims to lead in digital asset regulation. Legislative proposals focus on redefining regulatory roles. Ethereum trading volume has surged amid these discussions. Almost like Eric Trump said it was probably, a good time to buy Ethereum. Remember, you see a lot of these conflicting articles, the stories about, oh man, probably we're going to revisit this whole ETH's a security thing. Oh no. But then ETH's, why is trading volume going up? Remember what we said yesterday? That's the theme right now. And I feel like we got to keep talking about it so we can drive it home, because it's going to forever just be the same thing. I just closed something. Is that we got to watch what they do. Stop listening to what they're saying and watch what they do, right? You got BlackRock buying how much Bitcoin? Why are they buying it right now? Why is this coming out right now? You got to think about that. Do as they do, not as they say. Exactly, Doug. I mean, that's the whole thing. Why is BlackRock going to come out and buy $2.5 billion of Bitcoin if it's supposed to go down? Everybody's talking about, we got to go down. We need it. It's healthy. Motherfucker, it already went down. We already did the healthy thing. Remember, it went to the 70s? Did you guys forget about that already? We already did that. We don't need to do it again. We can just carry on with business now. It's time. For goodness sakes. My gosh. Greedy motherfuckers. Whether you didn't have the capital or you didn't take advantage of it when it was down into the 70s, not my problem. That's your problem. But don't ask for it to happen again because you fucked up. That's silliness. These companies know what's happening. You know what's happening. We all know what's happening. And the more and more people that start asking for the price to go down, guess what? You're going to get hoodwinked. because it ain't going to do it, because group think it does the opposite. So keep hoping, wishing, and dreaming, baby. Ain't happening. Meme season is building. I kind of feel like it's really weird. I kind of feel like there's a new meme season coming. And almost it's like, because remember, we're at the beck and call of institutions. This is not retail. Like our main bags are not going to pump until retail says it. And so maybe we get another little meme season going. I have no problem with that. I mean, they're fun. I like meme season. I know a lot of y'all like meme season. I know a lot of you like to hate on it and talk shit about it, but you know, you're there in the background there, degenning out. I just degened out this morning. I'm down a little bit on a couple bucks on this, no big deal. This Richie Rich on Sol. Let's see what happens, man. You see like the right groups of people calling something. Sometimes things move, man. We'll talk about that a little bit later though. Established memes. I was going to make a joke, but I decided not to. U.S. Treasury Scott Bessent has reiterated that the United States should become the premier destination for digital assets during a House Financial Services Committee meeting earlier today. The statement underscores the increasing legislative focus on creating a robust regulatory framework, shaping the U.S. as a leader in the digital currency space. Let's see. He also emphasized the country's role as the prime destination for digital assets during the committee hearing and reaffirmed efforts to establish comprehensive market structures aligning with the administration's broader economic strategy. All right, there you go. No rate hike. That's what we hear, huh? No rate hike. What about the drop? I just typed in rats. I need the E. Rates. Central bank expected to hold them. Yeah, I mean, that's what you guys figured. Unless they surprise us in the meeting. But no, there's nothing quite yet. All right. And we wait. And we wait. All right. So our next article is basically about this Fed meeting with uncertainty permeating the air. Here's what to expect. We'll just hit these quick hits, and then we'll carry on. But the Federal Reserve heads into its closely watched policy decision Wednesday with a strong incentive to do absolutely nothing. We're also watching them inject liquidity into the market so that they don't have to lower the rates. And so it's, market pricing in the futures markets implying almost no chance of an interest rate cut this week's meeting, and only in 1 in 3 probability of a reduction in the June session. Jerome Powell is going to have to say something. Fed Jerome Powell is going to have to say everything's on the table. He always says it, but this time he's going to have to mean it. That's from Vincent Reinhardt. All right, Vinny. It's going to be an awkward meeting. The Fed doesn't have a forecast to convey anything about the next couple meetings. The Fed's got to wait for two things. It's got to see that the policy actually goes into place, but then when it's demonstrated, it's got to see how inflation expectations react. So that's why the Fed's got to delay and then go slow. Oh, man. Yeah, Doug, I'll talk to you more about that later, but definitely that just like dropped off the face of the earth for sure. Huh. Well, when I was going to leave the studio, like I had reached out because we had that ATM, and I knew we were closing the studio down. I had no idea. Never heard anything back, but all right. Let's move on to our next article that we've got here. Tether is integrating Chainalysis to enhance the compliance of RWA tokenization on Hedera. Here it is in our Tether news today. The partnership between Tether and Chainalysis marks a fundamental step for growth and compliance in the RWA tokenization sector. Tether is the issuer of the largest stablecoin, as you guys know, USDT. We all know that. And they integrated with Chainalysis to advance compliance and monitoring tools. All right. What else we got here? This is in tokenization news. That's why we pulled the article. But what did Paulo Adreno say? The goal is to ensure a system that combines institutional level compliance without sacrificing decentralization and user control. Users will have access to risk detection tools, real-time transaction monitoring, and know your transaction, KYT. Oh, is that like the new version of KYC? Once you get to know your transaction a little, huh? Get to know it. How you doing? You know where I was going to go with this and that. And Chainalysis strengthens its position in blockchain monitoring, the context of increasing oversight in the crypto world. Let's see what they got. The crypto sector is under the spotlight of regulators and investors, absolutely, due to the complexity and risks associated with digital transactions and the fundamental growth of the entire ecosystem. But that means nothing in the context. The tokenization of assets represents the innovative frontier, but also a complex to regulate. I get that. All right, let's see. What's our next one? We're going to crush through these here a little bit here. Ethereum price holds steady following the Pectra upgrade. ETH is currently stuck 40% lower than it was this time last year after the devs finalized the Pectra upgrade. All right, so in brief, Ethereum's Pectra upgrade was successfully implemented but didn't boost the price, which continues trading at 1,800 or just under 1,800. Where was it? Where was it? Where was it? Let's go back and see here. 1806, right? 1803.22, 1806.28. It just jumped. Okay, so 1806. Yep. Despite excitement around the upgrade's 11 improvement proposals, analysts note Ethereum often act as a sell the news events, similar to what happened after the merge. I still have my, let's see, do I have that? Where would it be? Is it in this wallet? Let's see here. NFTs. No, I don't know where it is, but it definitely got a couple of those merge. It was like a free drop, the merge NFTs. Interesting. Markets appear more focused on the Federal Reserve's interest rate decision than on Ethereum's technical improvements, with CME FedWatch indicating a 95.6 chance rates will remain unchanged, as we know. All right, let's see. What are the 11 improvement proposals? Do they tell us? All right, let's just do some research here. Sorry to make you guys sick to let's go proposals. Cheapers. EIP 7702 tracking as Ethereum's Pectra upgrade goes live. So I guess, okay, so the improvements are going to improve, the proposals will have scalability, security, and user experience improvements. Okay, cool. What is this, like Pink Floyd, Ethereum style? That's funny. EIP 7702 introduces a set code transaction to which assigns a delegation indicator to, okay. Y'all can, I'll let you guys tell me about that. Here we go. In XRP news, shout out to the XRP army. Throw them up. XRP in focus as Ripple targets Portugal's crypto ecosystem in the latest partnership. Now, Ripple payments use the XRP ledger where users can send and receive different currencies, including fiat money and crypto assets, through a network of financial institutions using the XRP token. There you go. What you need to know right now is Ripple on Monday partnered with Portuguese currency exchange provider Unicambrio and support instant international payments between Portugal and Brazil. Ripple payments use the XRP ledger where users can send and receive different currencies. There you go. Portugal has developed a thriving crypto ecosystem, so we are delighted to open up our payment solution to partner there. That's from Cassie Craddock. She's the managing director, UK and Europe at Ripple. And by connecting our payment networks in Portugal and Brazil, we're facilitating faster, more cost-effective cross-border payments while strengthening the economic bridge between these two major markets. Ripple payments use the XRP ledger where users can send and receive different currencies, including fiat money and crypto assets, through a network of financial institutions using the XRP token. I think we already said that. So there you go. Shout out to XRP. Shout out to Portugal. Shout out to everybody that made that happen. I mean, that's massive, right? Between Portugal and Brazil. There you go. Instant international payments. Domino effects, guys. Just know The dominoes are going to fall. And then pretty soon, y'all thought $10 at Christmas was crazy. Shit, it's going to be $100 at Christmas soon. I know it's not true, but Strive Asset Management. Now, this is Vivek. There is a relationship. I know. Well, I'm sure we'll figure it out in here. There's a relationship with Strive and Vivek Ramaswamy. So Strive Asset Management joins the Bitcoin Treasury trend. Here we go. Strive Asset Management, a subsidiary of Vivek Ramaswamy's investment fund, will start a Bitcoin treasury after a reverse merger with a NASDAQ-listed company. Strive will offer a unique form of Bitcoin acquisition, a tax-exempt swap of Bitcoin for company equity. And the new fund will aim to raise $1 billion for a long-term program of buying Bitcoin. So he's going to buy $1 billion worth of it. But these motherfuckers aren't buying $30, $40, $50 like our little cheap-ass DCAs are. Okay, he's trying to find a way to buy $1 billion worth. This is the time, man. Let's go. Strive Asset Management announced its plan to build a Bitcoin treasury. Love to see that. Do we have any quotes coming out of here? Nope. We love quotes. Quotes. I love quotes. Oh, I didn't even switch it for you. Damn. Oh, it's like glitching. Oh. Uh-oh. All right. We're going to get off this page. There you go. I read you the story without even having it on there. My bad, fam. All right, our next story, Coinbase launching X402 for stablecoin payments via standard internet protocols. We're just going to do the TLDR on this one as well. Just trying to get you guys, hit you with some of that news, man. We got to expand our brain, see what's happening. And this isn't all just doom and gloom shit, right? This is, protocols and advancements in the tech and all that. And it's good for us to just be learning this shit. So Coinbase launching the X402, a protocol that enables instant stablecoin transfers over HTTP, integrating payments directly into web interactions. There you go. The initiative allows AI agents to operate autonomously, contracting services, accessing resources, and paying in real time. X402 was developed in collaboration with AWS Circle, Anthropic, and Near Protocol. Ooh, this is even more exciting. Coinbase, let's see, so they unveiled this. Unlike traditional payment systems, this protocol integrates value transfers into web interactions themselves. Users no longer need to rely on cards. How does Coinbase's initiative work? Payment required. Who's behind the project? Here we go. Coinbase developed this project alongside partners such as AWS Circle, Anthropic, and Near Protocol, like I said. A blockchain focused on AI-powered applications. Proposal also attractive to software developers and content creators as it enables new ways to monetize digital services. Applications could charge based on actual usage, and creators would have alternatives to monthly subscriptions or minimum credit card payments. Interesting. Okay. Hey, Mike. Hey, Doug. Hey, everybody. Hey, this is a great time for you guys to smash that like button. Don't forget to do that. Hit the X if you are watching on hard. Don't forget to repost the space out and text some friends. Beep, bop, boop, bop. All right. SocialFi in our next article here. SocialFi has failed to take off, and we know that. And it's like because of interest in crypto, and I kind of feel like SocialFi really needs to, in my opinion, before we go through any of this, I want to give you just a little 30,000 foot view from my brain about what I think of SocialFi. And I love the opportunity that it could provide and what it does, right? And if you're early, you can make some money and you could capitalize on that if you build a platform. And it's cool, but it just weans off after time. And one of the reasons why I feel like it weans off after time is that it's totally unauthentic. And it's like on X, like, yeah, some people are getting paid. Some people, engagement farm to get the impressions, to get the check. I'm not monetized on X. And so, all it's like what you see is what you get from me. But you get a lot of people who do a lot of fake bullshit, like on, when you can get, like, we'll use SocialFi, not X and being monetized there, but SocialFi where, you get a couple of the widget coins from this, widget platform or whatever. And, you just get a lot of unauthentic people just posting and begging. And I remember like when I joined the arena, I had a really good experience joining the arena, me personally, right? Like I had like a welcome party. It was like this watch party that I got to crash, but it was all like organized. And then boom, all of a sudden I was up like a shitload of AVAX, and like that was pretty cool, right? But then as like the platform went on, and forget all the problems and everything else that it had, just like with the content and what was going on was all of a sudden you have a lot of people just posting fucking begging for money. It's like, God damn. Like, no, like I'm not like this is like I'm walking down Skid Row with like a bunch of fucking beggars like shaking their cups. Like, no, like I'm not gonna spend any, because like to like jump onto a new platform, to re-engage, to rebuild, all that stuff's a pain in the ass. And so, you've got to deal with some things when you do that. But if you are literally just being met with people begging for money the whole fucking time, like it's like click, nope, next, I am out. I want no fucking part of that. No, thank you. And so that's, in my opinion, one of the major kink in the mix that you got for SocialFi. But let's see what this article says. This is someone else's opinion. SocialFi has failed to take off. Here's what needs to change. This is an opinion. The co-founder of Avel. On paper, SocialFi is a no-brainer. Promises to shift the balance of power in social media, giving people control over how their content and personal data are used and monetized. It even offers a stake in the advertising market, a pie currently devoured almost entirely by giants like Meta. And yet, SocialFi platforms today... Oh, you don't even see this. And yet today, SocialFi platforms today feel like more like digital ghost towns than the bustling hubs of Web 2. Friend Tech hails the breakout star in 23, peaked at just 80,000 daily users before falling below 10,000. What's holding SocialFi back? Why does it seem to be following in this obscurity rather than rising to rival Facebook dominance? Let's see. There's this article saying the harsh reality is that decentralized social networks have largely failed to attract and retain mainstream users despite genuine enthusiasm from Web3 communities. The fundamental promise of user ownership, data portability, and monetization remains compelling, but deep structural issues bottleneck adoption. Technical hurdles. All right, let's see. So, technical hurdles. Blockchain infrastructure was never designed for the high throughput, low latency demands of social networking. That's really interesting. Consider this. Ethereum handles just 15 to 20 transactions per second. Even Solana, often touted as a performance chain with 5,000 TPS, falls short. Compared to that to TikTok's 25 million daily uploads or X's 500 million daily posts, adoption becomes impossible when users face a 30-second confirmation delay to comment on a post, or volatile gas fees ranging from 10 cents to $50 during network congestion. Facts. I mean, that is just never going to be a thing. That is never going to be a thing. Like, wait, it's going to cost me $10 to post this? Or there's that, you can't plan. Like if it was a penny every time and that was it, but you were going to be making more than a penny on your post, then it would make sense, right? And that is really just to avoid, usually when you have to pay, even when you do the thing, like we're going to charge your thing $1, but you're going to get it back. That stops the scammers because they don't want anybody charging them anything because they're afraid you're just going to steal everything. And so, like usually that is a really good model to weed scammers out. Now you got AI, you got a lot of things that probably would even combat all of that. So, let's see. Web 2's hard won lessons. Meta spends $35 billion annually on research and development to refine its platform's addictive simplicity. TikTok's algorithm, owned through 1 billion hours of daily user engagement, delivers content so frictionless that 47% of users open the app immediately upon waking. The result, interfaces where the tech disappears behind the experience. This becomes addicting, and SocialFi has never and will never be addicting. By contrast, most SocialFi platforms confront new users with wallet pop-ups, crypto slang, and variable fees. No thanks. All right. Well, we know there's a lot to do as far as SocialFi goes, and we wish the best for it. I would love, a platform where you get rewarded a little better for your creations, for being a creator, for some people who are artists, meme masters, all that stuff. But until then, just keep plugging away on these centralized entities because that's where it's at. But if you feel like you want to spend some time creating another social media account on these things as they pop up. Again, it worked out very well for me to capitalize on it early, but then it just all just died off and tapered off. But to each their own on that. If it's something you want to stick around for, if you want to just capitalize on the initial pop and then move on at like when time, because it's almost like Web3 gaming, right? It's like that dinosaur model. Like as users drop off, like those rewards drop off, and like when it's getting popping, people are paying and tipping and all that shit, and then when you get the beggars and money, money gets tight, or the price of the coin starts going down, all that stuff, and people stop tipping, then you're like, what the fuck am I doing here? Like I'll just go back over to X. Anyway. Doodles to launch the Dude token on Solana. One of the most prominent NFT projects in the digital space, set to make a major move with the launch of its Dude token on May 9th. Get yourself some dude. Come on, dude. I'm going to probably just talk like that for the rest of this article. So the Dude token is going to be introduced on the Solana blockchain, man. It's designed to serve as a key utility within the Doodles ecosystem, dude. Dudes and dudettes, I should say, like, wish I had long hair right now. Dudes and dudettes, like, gotta be like making sure that we represent. Binance is stepping in. The first exchange is gonna be carrying dude. All right, man. Way to go, Binance. Gnarly, dude. Try to add to the excitement. Binance is gonna have an airdrop. Whoa, dude. I mean, whoa, that's the coin name too, dude. Sorry, that was too much fun. Who's getting their dude coin? Their dude coin. Dude coin. That was fun. May 9th. Today's May 7th. Motherfuckers, it's also May 7th. Today's the first day of the pizza trading competition on Femex. Did you sign up? Did you join the team? Did you do that? I've been asking you for the last little bit here. Now today it starts. You can win yourself some money. It's okay that you didn't get kicked off in the beginning of it this morning, but I would suggest you join. Go to the description if you're watching on YouTube. Go to the link in my bio. You can also go to my webpage, check it out, give me some feedback. I got some feedback yesterday, I listened to it. I made some changes, working on it. So I'm still working on trying to refine this thing so I got the best foot forward when we get out to Canada next week. But join the fucking trade team. Try to win some money. Squad up. I got a Telegram too that's got like experts and pros dropping signals. I'm chatting. I'm putting stuff in there too now. So let's go. Come on. Link in bio. Link in description. Don't be a chump. Unless you're just going to get... And also, because Femex has the... look, this plays great. Doodles is on Solana. Femex has Memex, which you can now get memes on Solana, Base, and BNB. So say you got some trades going over on Femex and you pull some profits because we're crushing it. Y'all, you can do that right there on the platform. You don't need to withdraw it. You don't need to send it over to your Phantom wallet. You don't need to wait to do all that stuff. You can literally do it right there on the platform. Okay? I'm just saying. Get you some dude. I'm going to do that. I'm going to do that on the 7th or on the 9th. Reminder. That's me writing on my whiteboard. All right. I think we have one more. Uno más. Uno más. I feel like I'm at karate combat. Oh, you can kind of see. Look, I put that up. The block father. That's usually not on camera though, so that. There you go. That's for like a different thing, like when I start doing TikToks. Coming soon. Blockchain baddies. Blockchain baddies on how to bring more women into crypto. I love this, man. It's funny. When I first got into crypto, man, it was nothing but dudes. And yes, there were women in crypto. Yes. But it, that's the whole joke, is that it was just nothing but nerds and dudes. But now there has always been a big push. Sometimes it's a joke because of like how it can only be women in Web3 and that kind of stuff. But at the end of the day, the more that we can incorporate everybody who has got a thinking mind into this space to help us grow is definitely not a bad thing. So I love that there are emphasis on this and how it all works. And it looks like there was a pretty cool event at Token 2049 in Dubai with the blockchain baddies. So let's see what they got here. Women in Web3 shared how clarity, education, and community are key to attracting more women in crypto. There you go. You've got a little picture from the event. Women in Web3 share experiences in the crypto space. from providing clarity to bidding skills. Caroline York, the marketing director of the Web3 firm Serotonin, said that making the space more welcoming to women starts with clarity. In order to attract more women, we've got to make the information more digestible and a lot clearer. I know we've all been saying that for years. Is that, I mean, for most people, you get into this conversation with someone, say there's a group of people who are in crypto and we're trying to explain crypto to somebody. It's just, this is like vocal diarrhea at some point, because most people are like, what are you talking about? Because we're so excited to talk about it. So this would make a lot of sense to bring this down. I know that I am probably, when I get back from Canada, as you guys know, we've been working with like the format of the show, and obviously the timing, doing it at 1:30 now is much different. It is working out way better for me. So I appreciate you guys tuning in. That's awesome. But when I get back from Toronto, we're going to come back and we'll start doing some more of the theme shows weekly. And one of them is going to be about women and moms and how, we can integrate that educational aspect in that role and really start to, make a change, if you will, if that's the right thing even to say. So that's when I get back from Canada. I cannot wait to see all you guys out there. It is going to be a lot of fun. I got a lot of work to do and I'm going to be extremely busy, but I am definitely looking forward to spending some time with the crew. Let's go. Smash the like button if you like crypto. All right. I believe that's it. I think that we could probably skip the video on Sam Altman. We'll do a reaction video, possibly tomorrow instead. We don't have to do it every day. We did it Monday and Tuesday. We'll take today off. And then let's look and see. Let's head on over to TradingView. We'll look at some charts. Guys, remember, if there's any charts that you want to look at specifically, let me know. And we can pull that up. All right. What are we on here? I'm on the dominance on the hourly. I want to put this on the daily. As we know, we are on the road to 70%. Our line is obviously a little bit above it, but here, you know what? Let's go to the weekly. I like looking at the weekly for this chart here. And you know why? Because it tells another story. The one that we have been telling lately as well is, if you look at Bitcoin dominance, look at historically what happens after this thing touches 70%. Actually, you can't really even tell. But look, this right here. Hey, brush. This drop right there, that's altcoin season. This right here, that's altcoin season. This right here is a little baby altcoins. This is like a nice little altcoin run. Kind of like, guys, this is November. This is what you experience. Remember, this is dominance. When dominance has to go down, the Bitcoin price does not have to go down, but dominance has to go down for altcoins to go up. And we'll look at the others chart here in a second. But so when we look at this, like, holy shit, okay, so the march to 70 continues. That's what we want. We want that because it's almost like we know what to expect from that. Does it go up higher than 70%? It could spend a little bit of time, but then after that to me, that's what we're waiting for, the road to 70. Let's see it happen. I've got this thing lined up with this little line right here, so we'll see exactly how this plays out. So let's see if we put it now on the daily. So this is what we did yesterday. So we put this in yesterday, kind of what we think and how the march to 70 is going to work. And according to this, we're going to see this happen by early to mid-June. So we got about a month. We're going to have another month or so of watching dominance continue to climb. Does that mean that it's going to go straight up? No, not at all. We could see that go like boom, 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 boom. Something like that. Who knows? There's no way it'll be that choppy, but I think you guys get the drift. Let me get rid of that. So dominance, the road to 70. I'm convinced it's happening at this point. So until it completely changes the direction on me and starts heading down like that, I'm planning for 70, and we can all plan our alts accordingly, because that just means that we're not going to see an altcoin season until that happens. And, history doesn't repeat. I get it. I get history does not repeat. But you know what? It sure does rhyme. And so there you go. All right. The next chart we got up here, XRP. I've got this thing looking like we are still in our downtrend that has been happening since the end of last year. You got a few moments, a few breakout moments, some wick moments, all that stuff. We could, in theory, even maybe tighten that up a little bit here on the bottom. We could maybe even. Now we want to keep. So we're still in this. You're in a down range until you're in a downtrend until you're not. And so here with XRP, we are kind of leveling off, and it would be great to see this thing pop up out of this downtrend and break out. We're due for it any time now, I would think, right? It would make the most amount of sense. And so Powell's about to go on. Here we go. We've got this waiting. We've got it waiting. We are waiting for it. Give 2-minute warning in the room. Okay, let's go to X. See if we can find it on X so we don't get hit with any. Let's go to the Fed meeting. All right, so I don't think. Yeah, I mean, so I've got it. Here we go. Volume seems to be extremely low on this. Watch on YouTube. Oops, sorry. Closed the wrong screen, damn it. I don't hear any sound from here, but there we go. Here he is. I'm a full screen.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged.
Boo!
The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. the labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chair, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. You know, I think, if you look at where we are today, we have an economy that, if you look through, you know, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
If the goal is to get there, that's my whole thing. If that's the goal, get there.
Around 2021 is the price shocks. There are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So go through 2024 up to the day. We've had unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see
Bitcoin buys on a mole scale everywhere. We're going to buy all the Bitcoin, all the ONDO, all the XRP, and probably a shitload of Solana too.
then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps
we know that's bullshit anyway, though. They lied to us.
Of negative monthly job reports. I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. We're not in this situation, but the situation is if the two goals are in tension. So let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are is, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And we just don't know. Until we know more about how this is going to settle out and what the economic implications are for employment, for inflation, I couldn't confidently say that I know what the appropriate path will be.
So following on that, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify, and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. The economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot.
I don't think he wants any more questions, which is fine.
Negative
He wants
stuff,
to be out
negative
already.
sentiment that was in there, and I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour, but the Beige Book was talking about the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in the actual economic data yet. And by the way, consumers keep spending, credit card spending. It's still a healthy economy, albeit one that is
Credit card spending is not a healthy
very
economy when
downbeat
that's all people are
sentiment
like
on the
using to
part
live, I
of
don't think.
people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
that the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we of course tapered and everything. And then we immediately went into QT, and we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one thing, one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not in your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. What we said was that we never targeted unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, wanted to hear it that way. But that's not at all what we meant. So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that into consideration.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the, a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there will be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President
Happy
Trump
Wednesday,
now
pal.
says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Damn it.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. We don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great, and just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the two goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other, and if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. I think what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We know give Congress fiscal advice. They're going to do. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path, and it's on Congress to figure out how to get us back on a sustainable path, and it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Jeez, another one.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement. And we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two. Potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
I can't give you.
Yeah, he's got to be on
I'm not going to try to give you a specific number. I'll just say
the things that just keep you
have to now be
regulated,
looking at both variables.
like what golfers take.
Which of them
beta blockers
is demanding? If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less, equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Yeah, he's like, come on, another one.
Claire Jones, Financial Times.
He's writing a note to his staff right now. No more fucking
Got
questions.
some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
Just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decision. So the volume of the imported goods increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of the first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really I don't think it's going to affect our decisions. I will just say though that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economies. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right that we had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
God damn.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier
He's
that
so
you're
mad that there's still
monitoring
questions.
the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else. And, right now we see inflation, kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as
You already
chair
fucking
expires
adjust this, you
next year.
bozo.
But
You not paying attention?
Your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night. And this is a challenging situation, and that's 100% of our focus right now.
Let's go to Jennifer for the last question. Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
Yeah,
I've
you
never
little
asked
bitch.
for a meeting with any president, and I never will. It's not. I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a direction, a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do.
How many more questions
Thanks
is he
very
gonna
much.
take? There he is. He said, "I'm fucking done. Get me out of here. No more even chit." He said, "Get out of here." Okay. Let's go back. I want to do just I got a couple charts that I need to check out really quick from my guy Doug, and then we're gonna skedaddle for the day. Let me just bring myself up here. Thank you guys for hanging out. That was JP talking. If you missed the beginning, rates are not dropping, they're not raising, they are staying the same, and they got no incentive to do anything other than just to chill. So that's what they're doing. All right, one of the charts that Dougie Doug wanted me to pull up was the XAI. Here it is. As you can see, this thing slipped down below today. Here, let me make this bigger so you guys can see this. So we're looking at the VWAP leapfrog indicator right here. That's what all these little lines and tags are for. So you saw this down. Now you could have, if you're a trader and all this stuff, you see this thing slip down, you could have caught this thing, man. You could have caught it back up to the daily here. It's sitting at the previous daily, but man, 3% at a little leverage, you could have had yourself a nice day. That's 30% if you're on 10X. So that was an opportunity there. Make sure you guys, if you don't know what I'm talking about with these VWAP indicators, go back on my channel, watch the video I did with Flopping Groper, learn a little bit about it. If you got more questions, you can reach out, ask me. I would love to chat with you and let you know. This is just an absolutely amazing indicator. So wanted to make sure that I brought that one up. And then was there another one that you got? I think that we'll look at more charts tomorrow. Today was long enough. Obviously, with the instead of a watch party, me commenting, we just watched JP talk the whole time. So definitely the question session lasted a lot longer than I thought it was going to. So it is what it is. But I definitely appreciate every single one of you guys hanging out with me today. Thank you so much. You know, your options in the afternoon are various, and there's usually a lot of things going on. So the fact that you chose to spend some time with me, I sure do appreciate you. Thank you. Just make sure that you smash that like button. That is a little quid pro quo. That's you slapping your own shoulder, you slapping your own back, saying thank you. I appreciate it. All right. Yo, there you go. Turbo made it. He finished school as the AI guy. He got a job on dev and base. Dude, my guy. Congratulations, Turbo. Yes, I will reach out to you soon. All right. Man, that's good news, brother. I'm so excited to hear that. All right, I will see you guys tomorrow. Remember, do something to make yourself better. We'll check back in tomorrow. That's 1% every single day. And you'll get there, man. You will get there. We'll all get there. We're going to do it together. That's the goal. That's the promise. I will see you tomorrow. Have a good night.